Hello friends. You are watching 3AZ Vision, an innovative distance learning channel. We have started a series of videos about international financial reporting standards and international accounting standards, followed one by one. It is most important and desired that if you are interested in improving your learnings in international financial reporting standards and international accounting standards, subscribe to our channel and click on bell icon to get our future updates. In preparation of IFRS 5 video, we tried our level best to cover the maximum matter of discussion, which will be helpful to understand the IFRS 5. Therefore, watch full videos for its complete knowledge. Non-current assets held for sale and discontinued operations. Here, we will discuss about its main 7 elements as: Number 1. Objective. Number 2. Scope. Number 3. Classification of non-current assets. Number 4. Measurement of non-current assets. Number 5. Presentation and disclosure. Number 6. Transitional, non-current assets held for sale and discontinued operations. We have split up the learning of this IFRS into 2 parts. In part 1, we will discuss its first 4 main elements as: its objective, its scope, classification of non-current assets, and measurement of non-current assets. And in part 2, we will discuss its rest of main 3 elements as: presentation and disclosure, transitional provisions, and objective. The objective of this IFRS is to specify the accounting for assets held for sale, and the presentation and disclosure of discontinued operations. In particular, the IFRS requires: Number 1. Assets that meet the criteria to be classified as held for sale, to be measured at the lower of carrying amount, and fair value less costs to sell, and depreciation on such assets to cease, and Number 2. Assets that meet the criteria to be classified as held for sale, to be presented separately in the statement of financial position, and the results of discontinued operations to be presented separately in the statement of comprehensive income. The scope of this IFRS covers: Number 1. The classification and presentation requirements of this IFRS apply to all recognized non-current assets and to all disposal groups of an entity. Number 2. Assets classified as non-current in accordance with IAS 1, presentation of financial statements, shall not be reclassified as current assets, until they meet the criteria to be classified as held for sale, in accordance with this IFRS. Number 3. Sometimes an entity disposes of a group of assets, possibly with some directly associated liabilities, together in a single transaction. The measurement provisions of this IFRS do not apply to the following assets, which are covered by the standards listed, either as individual assets, or as part of a disposal group. Number 1. Deferred tax assets. Number 2. Assets arising from employee benefits. Number 3. Financial assets. Number 4. Non-current assets that are accounted for in accordance with the fair value model. Number 5. Non-current assets that are measured at fair value less estimated point of sale costs, and Number 6. Contractual rights under insurance contracts as defined in IFRS 4 insurance contracts. The third main element of this IFRS is classification of non-current assets, or disposal groups, as held for sale. An entity shall classify a non-current asset, or disposal group, as held for sale, if its carrying amount will be recovered principally through a sale transaction, rather than through continuing use. Number 1. For this to be the case, the asset, or disposal group, must be available for immediate sale in its present condition, subject only to terms that are usual and customary for sales of such assets, or disposal groups, and its sale must be highly probable. Number 2. For the sale to be highly probable, the appropriate level of management must be committed to a plan to sell the asset, or disposal group, and an active program to locate a buyer, and complete the plan must have been initiated. Number 3. Events or circumstances may extend the period to complete the sale beyond 1 year. Number 4. Sale transactions include exchanges of non-current assets for other non-current assets, when the exchange has commercial substance. Number 5. When an entity acquires a non-current asset, or disposal group, exclusively with a view to its subsequent disposal, it shall classify the non-current asset, or disposal group, as held for sale, at the acquisition date only, if the 1-year requirement, and it is highly probable, that any other criteria, that are not met at that date will be met within a short period, following the acquisition, usually within 3 months. Non-current assets that are to be abandoned. An entity shall not classify as held for sale a non-current asset, or disposal group, that is to be abandoned. This is because its carrying amount will be recovered principally through continuing use. However, if the disposal group to be abandoned, the entity shall present the results, and cash flows of the disposal group, as discontinued operations at the date, on which it ceases to be used. Non-current assets, or disposal groups, to be abandoned, include non-current assets, or disposal groups, that are to be used to the end of their economic life, and non-current assets, or disposal groups, that are to be closed rather than sold. An entity shall not account for a non-current asset, that has been temporarily taken out of use, as if it had been abandoned. The fourth element of this IFRS is measurement of non-current assets, or disposal groups, classified as held for sale. We will discuss about its first main factor, measurement of a non-current asset, or disposal group. An entity shall measure a non-current asset, or disposal group, classified as held for sale, at the lower of its carrying amount, and fair value less costs to sell. Number 1. If a newly acquired asset, or disposal group, meets the criteria to be classified as held for sale, will result in the asset, or disposal group, being measured on initial recognition, at the lower of its carrying amount had it not been so classified, for example, cost and fair value less costs to sell. Number 2. An entity shall measure a non-current asset, or disposal group, classified as held for sale at the lower of its carrying amount, and fair value less costs to sell. If a newly acquired asset, or disposal group, meets the criteria to be classified as held for sale, will result in the asset, or disposal group, being measured on initial recognition, at the lower of its carrying amount had it not been so classified, for example, cost and fair value less costs to sell. Hence, if the asset, or disposal group, is acquired as part of a business combination, it shall be measured at fair value less costs to sell. Number 3. When the sale is expected to occur beyond 1 year, the entity shall measure the costs to sell at their present value. Any increase in the present value of the costs to sell that arises from the passage of time shall be presented in profit or loss as a financing cost. Number 4. Immediately before the initial classification of the asset, or disposal group, as held for sale, the carrying amounts of the asset, or all the assets and liabilities in the group, shall be measured in accordance with applicable IFRSs. Number 5. On subsequent remeasurement of a disposal group, the carrying amounts of any assets and liabilities, that are not within the scope of the measurement requirements of this IFRS, but are included in a disposal group, classified as held for sale, shall be remeasured in accordance with applicable IFRSs, before the fair value less costs to sell of the disposal group is remeasured. The second factor of this element is recognition of impairment losses and reversals. Number 1. An entity shall recognize an impairment loss for any initial, or subsequent write-down of the asset, or disposal group, to fair value less costs to sell, to the extent that it has not been recognized. Number 2. An entity shall recognize a gain for any subsequent increase, in fair value less costs to sell of an asset, but not in excess of the cumulative impairment loss, that has been recognized either in accordance with this IFRS, or previously in accordance with IAS 36 impairment of assets. Number 3. An entity shall recognize a gain for any subsequent increase in fair value less costs to sell of a disposal group, to the extent that it has not been, but not in excess of the cumulative impairment loss that has been recognized, either in accordance with this IFRS or previously in accordance with IAS 36, on the non-current assets that are within the scope of the measurement requirements of this IFRS. Number 4. The impairment loss, or any subsequent gain, recognized for a disposal group, shall reduce, or increase, the carrying amount of the non-current assets in the group, that are within the scope of the measurement requirements of this IFRS. Number 5. A gain or loss not previously recognized by the date of the sale of a non-current asset, or disposal group, shall be recognized at the date of derecognition. Number 6. An entity shall not depreciate, or amortize, a non-current asset while it is classified as held for sale or while it is part of a disposal group classified as held for sale. The fourth main factor of this element is changes to a plan of sale. Number 1. If an entity has classified an asset, or disposal group, as held for sale, but the criteria in this IFRS are no longer met, the entity shall cease to classify the asset, or disposal group, as held for sale. Number 2. The entity shall measure a non-current asset that ceases to be classified as held for sale, or ceases to be included in a disposal group classified as held for sale, at the lower of a. its carrying amount before the asset, or disposal group, was classified as held for sale, adjusted for any depreciation, amortization, or revaluations that would have been recognized had the asset, or disposal group, not been classified as held for sale, and b. its recoverable amount at the date of the subsequent decision not to sell. Number 3. The entity shall include any required adjustment to the carrying amount of a non-current asset, that ceases to be classified as held for sale, in profit or loss from continuing operations in the period, in which the criteria in this IFRS are no longer met. The entity shall present that adjustment in the same caption, in the statement of comprehensive income, used to present a gain or loss, if any. Number 4. If an entity removes an individual asset or liability, from a disposal group classified as held for sale, the remaining assets and liabilities of the disposal group to be sold, shall continue to be measured as a group only if the group meets the criteria in this IFRS. Dear friends, in the second part of this IFRS, we will discuss about the next three main elements of this IFRS as presentation and disclosure, transitional provisions and effective date. Keep on watching our videos to increase your learnings. Thanks and goodbye.